What's going on? Welcome on into today's trade recap. We are looking at a loss, technically break-even day, whatever you want to call it. It breaks the green streak. Which was about 7 days in a row. But if we're going to break the green streak, I will gladly break it with a $20 loss. $20 bill, here you go. Fine, whatever. This is essentially a break even. I put my stop to break even, and we lost 20 bucks. I would think when trading shares would lose less. It would actually be a zero on the P&L after, or I guess with some fees, commissions, maybe a few bucks, whatever. But it was on Meta. So let's jump into it. This is going to be kind of a two-part story to talk about. I want to go over two things. This is going to get all shaved off here soon. I am tired of it. So I don't know. I just keep seeing puffs and I'm done. Hair is coming off. I'm going short and I think that's going to be there. We're going to stay that way for a while. Okay, bigger picture on Meta. We'll start there. Where is Meta? Meta. Why is it not? Am I blind? Oh, wow, it's at the top. I am blind. So bigger picture on Meta, go to the daily chart, and what you're going to see is we've got a pretty nice breakout occurring on Meta. Bigger pictures, if this is a swing trade to the upside, I would be in, and I actually am in testing swings on the prop firm account with a demo account there, but it would be a swing trade breakout up over 312. I like the break. Meta was consolidating for a while, and I'm looking for a push up towards high of year and even actually towards 330 or more. And then the stop loss would be under the breaking candle, which would be around 301, call it 300 bucks or so. That's besides the point. That's just there to frame us into why we took the long. Now, is the market up today? No, everything is technically down. We had a gap down over the weekend. Across the board, look at my screen, right? Meta is the only green stock. Everything else is red. But after the bounce we had on Friday, I just don't have any shorts. There's no shorts that I'm going to trade. Not going to happen. Nothing is setting up to the short side, so longs would be the play. And Meta was actually the strongest, broke the highs of last week. Great, even though the market's technically red, fine. Not a big deal, not the end of the world. Just didn't have the full continuation push from the market. That could have been a part to why this didn't work. But now let's jump back over to TradeZilla. And I want to, first off, I'm going to tag this. And we'll cover that in a second. But let's go to the replay function. Now, if I pull the replay function up, or the replay feature, you'll see my entries and exits. I had 2 contracts, and it was next Friday's expiration, and that was it. We entered here at 9:09 a.m., so I'm going to move this slider to just before 9, and then I'm going to start playing this out. We're going to adjust it to a 5-minute chart, because that's what I like to use, and I'm going to go to 30x speed, so this is not going to take forever to look through. So essentially what I'm looking at here is I see Meta, it's strong. I'm like, okay, if there's going to be a long today, it's probably going to be Meta. That would be more my favorite, pick out of the bunch if we get an opportunity. And so I'm watching things play out, and I'm saying, okay, wait, stop. Here we go. Like we have a nice move up. We are now in consolidation for a good 15-20 minutes. If we break high of day, I like it. Now, there's one more piece to this puzzle that I'll get to in a second. But as I play this out, you'll see when the entry hits, boom, new high of the day, I enter. I actually may have entered like a second before that, but as we got to the top of that wick, I entered. And now I'm looking and saying to myself, okay, where's the stop loss going to be? The stop loss for me on essentially something that I actually kind of back tested, if you will, through my data last month. And the stop loss is under breaking candle lows on longs and breaking candle highs on shorts. So what is that going to mean? That means, okay, stop loss is here. If we fall back under 317, which is essentially the low of this candle, I'm out no matter what. No matter if I'm down 5%, if I'm up, if I'm down 20%, like that's probably too much as it is, but okay, you're out no matter what. So that's where the stop is. Next candle, it kind of messes around. Not a big deal. I'm like, okay, we're fine. No big deal. Like we're just kind of holding, up. We're not immediately come back down. My concern on these breaks and the way that's why I like them so much is because you know pretty quick if you're going to be right or wrong. There's George in the background. I don't know if you can see him. Oh no, he's shaking himself off. But if it's going to be a false break and it's going to be a massive like liquidity grab and then complete change direction, many times you'll get a big upper wick and then a hammer down, and then the market just or price action just comes right back down. We didn't really get that. So we had, 10 minutes of like not really doing that, which is why I'm like, okay, this is looking okay. This looks fine. Like this is fine. No big deal, right? It didn't have the momentum on the break really, truly, but it broke and now it's holding strong. If we can get another push, maybe it's going to go. Now here is where I say to myself, okay, what about Bookmap? What about looking at liquidity? Let's go see if I can find that. And that was where the next piece of the story comes in. I'm quite aware of this. So cover this up for a second. What I'm watching is this massive level of liquidity at 320. Psychological level, 320 is a pretty key spot. I'm like, okay, now it's kind of making some sense. We came up to that spot, and now we're kind of hovering around. We got pushed up back up into that spot, and you see that liquidity, big buyer there. But does that mean that we have to go up just because we broke through that, or that liquidity, that those orders got bought up? Not necessarily. Doesn't mean we have to go up. In this case, it was the opposite. It actually sent us back down. So now I'm like, okay, 320 is the key level. Not surprising, right? It's the next psychological spot. The highs of these candles are like just shy of 320. Makes sense. So now I'm like, okay, if we can break 320, we can get a nice push. And honestly, if I'm looking at this with fresh eyes, I'm like, hey, this is actually another trade setting up. 320 break will be the good trade. So I'm up currently a little bit right now, but if we break 320, I'll be able to take profits, if we hold that move. So now it's how I'm looking at this. But at the same time, like if we break it and we can't push, not going to be a good look. And what do we see? We break it by about 30, 35 cents. This little upper wick right here, if I can zoom in a bit better. This little upper wick breaks 320. And then what happens? That same exact candle starts to sell off. Pressure, pressure, pressure. Not a good look, not a good look. Boom. Once we broke the structure of these higher lows, I'm out. And that's where I got out. Now, actually, that structure of higher lows happened to be right where my entry point was. So it ends up being I put my stop loss to break even on the option contracts, and then it ended up filling me. So I got in at 350, and I put the stop loss at 350. And then what happens is that once the stop is triggered, it'll literally just market sell you out. And so many times you get filled at a shittier price, which is fine, not a big deal. I know when I do that on a stock that has a huge spread, not the best, on Meta, all the stocks I trade, okay, worst case, it's a 10 cent, it's a 10 cent, miss, or, there's a 10 cent spread and you get filled 10 cents lower than you wanted to. Again, in that case, break even is essentially the same deal. That's how I viewed it. So, and looking forward, right, as you play this out, right, ends up being a good play because what you'll notice is that, we can go back to the charts. Go look at Meta's 5-minute chart, right? So you can see how clear that is now. Now, this would actually be a candidate for one of those reversal trades that I would play, the inverse of my strategy, where you have this, right, and then you break that, and then your stop loss is over those highs. It would have been a good candidate, and honestly, I could have traded it. The only reason why I decided not to do so is because I like those looks in stocks that don't have a clear daily uptrend or daily breakout. We are in the midst of, or potentially, maybe this could reverse too, of a pretty strong daily breakout on Meta. So if Meta was inside of, let's say, like this consolidation and it pulls that move inside of here, then yeah, I'd be more interested in a short. But the bigger picture is that Meta's breaking out of this consolidation, and so we are still above that breakout. Yeah, it could totally pull back a bit and then still go. I'm not going to short that move. I'm not going to go play the inverse of my strategy when we have a strong, bigger picture breakout or bigger picture momentum setting up. So that's it for the day. I'm not going to trade anything else. $20 is $20, so I guess. So we break the 7-day win streak. It's okay. We have a $20 loss. Not a big deal. I'll be back at it tomorrow, and we'll see what happens. So again, it's kind of one of those examples too in our situation where I'm kind of looking forward to shares. I kind of am, because we can minimize the backside of some of these moves a little bit more, which again, not a big deal. But if this was an actual break-even day, a $0 day, just those little 20s here and there, those little stop losses on options kind of mess with you a bit. Not that it's going to be like the perfect scenario when you go to shares, but I think you'll be able to minimize. Okay, if you lose $20 on options, maybe you can lose 5 or 10 on a stop loss like that. So again, it just brings your backside up a little. It minimizes the drawdown a little bit, which is not a ton, but just moving the needle like that could be the difference. As you see that my 2 red months were not very large. right? So it could be the difference of potentially going red, green in a month, or over time stacking up to save you a decent chunk of change as the months and years go on. So there you guys have it. That's essentially how I viewed it. I used TradeZella to track all this stuff. I love the trade replay feature. We're going to probably use this a lot more. And then Bookmap was kind of the other piece to the puzzle here to kind of show me, okay, not that it really mattered that much. All I knew was if we break this level, we have a nice pop opportunity. And if we break it and then we get a quick upper wick and then a push back down, that's like the sign, get out, just get out, just get out. No breakouts coming. Momentum is not there. Don't do it. Shorts are going to take control. That's it. And then same thing on the reverse. That's why I like to use them both. And there you guys have it. Thanks so much for watching. I'll leave links to these guys down below if you want to check them out, and I'll see you in the next one. Peace.